I think you could get to 25. Ultimately, I still think we have downside to go. I don't think by any stretch, think about it like this. This is the first bear market where Bitcoin doesn't have Fed printing money.
Yeah.
And so it would be really weird for it to not go down as much as past cycles. So it's got to probably at least do that, and I do worry that it could even go down more than 80 to 85%.
After the cryptocurrency market had lost $165 billion from its market capitalization in a week, Bitcoin dropped below $20,000 and is still struggling to pull itself back above that threshold. Back in January 2022, Soloway projected that the cryptocurrency sector might experience a dot-com moment soon, but also predicted that Bitcoin could trade at around $100,000 or $250,000 in the next 5 years. In a recent interview, chief market strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts, as well as his predictions and price targets for Bitcoin and gold. In his opinion, he still believes that Bitcoin might drop further to a low of $12,000. He is also a proponent of crypto regulation, believing that it would be a positive thing for Bitcoin and cryptocurrencies in general, as institutions would feel more confident investing their clients' money in them. Before listening to him, please ensure to smash the like button and subscribe to the channel.
Bitcoin is probably the quietest it's been in a really long time, which is kind of amazing because the stock market is the wildest it's been in a long time, right? So we've seen this weird divergence where the U.S. dollar yields and the stock market have really been going up and down, and the stock market obviously going down a lot more. But at the same time, Bitcoin has really gone quiet for the past 2 weeks or so.
Yeah.
And what that tells me, by the way, when you have these quiet periods, it's like the eye of the storm. So we're going to come out of this, and we're going to have a crazy move. And the question is, which way is it going to go?
Yeah, that's just it. So it's like breakout or pullback. What are we feeling?
So I think near term, I think you actually are going to see an up move. Now it's probably like 22.5 is a resistance, and then 25,000.
Okay.
I think you could get to 25. Ultimately, I still think we have downside to go. I don't think by any stretch, think about it like this. This is the first bear market where Bitcoin doesn't have Fed printing money.
Yeah.
And so it would be really weird for it to not go down as much as past cycles. So it's got to probably at least do that, and I do worry that it could even go down more than 80 to 85%. But the charts are the charts, and this is the amazing thing about it, is it doesn't matter if it's crude oil, it doesn't matter if it's a stock like Apple or Bitcoin. The charts will tell you the highest probability kind of issue or where it's going to go. And you just have to go with it, because you're not going to be right 100% of the time. No one is. But if you can be right 70 or 80% of the time, you are golden.
Exactly. And I mean, you're talking about a pullback that we could see in Bitcoin right now. I mean, I know earlier this year you mentioned something about a 12K pullback, something in that range.
Yeah.
When do you think we're going to see that, if at all?
So I think probably we see 12K by end of year, early 2023, first quarter of 2023.
Yeah.
And then from there, it's going to be the big test, because at that point, you're down 80 to 85%, which matches past cycles. And a lot's going to have to do with what's the Fed doing, how's the economy, how's the stock market, right? We know that in general, even though the last 2 weeks you're not seeing a correlation, if the stock market really takes a big leg down, I do think Bitcoin is pushed lower because people just panic and sell.
Yeah.
And so it's going to be one of those things where once we get to 12, 13, I'm going to be really zoned in and saying to myself, all right, when is the bottom? I'm going to start looking for those bottoming signals in the charts.
Yeah, I mean, I think a few months ago we had an interview and you told me that you sold off a lot of your Bitcoin at the time. Are you still selling it off?
No, I mean, at this point, I still have a little Bitcoin, but it certainly is a very minor position for where I want to be.
Yeah.
I love the idea of being in the position of not being all in, because it gives you the freedom of not, number one, you sleep a lot better at night, right? And number two, you get in this situation of saying, okay, and this is the beauty of charting, is like, the charts predict that it should go down further, but there is always a level that if it gets above, now the charts flip to bullish. So like so many people in this industry of trading, they're very zoned into like, I think it's bearish or I think it's bullish. And their ego doesn't allow them to change their mind. Yeah. A good trader can see that and kind of, the laptop, there we go. And a good trader can ultimately focus in and say, okay, now is the time to switch my viewpoint, right?
Yeah.
And that's really the best thing about it, is that there will be points where if it gets above a certain level, you just go bullish.
Yeah.
But until then, I got to be bearish.
So when it does hit that 12K mark, if and when, Will you be hodling long term, or are you going to just buy a big portion of it back? Is that your strategy?
So the goal is, and this is the kind of crazy thing about it, is that for the most part, I'm not even going to wait to 12,000 before I start hodling, right?
Yeah.
So as a trader, I've learned the hard way that sometimes things don't hit your targets. Sometimes they go below, sometimes they don't get down to it. So for me, it's like when it's in the teens, I start to accumulate really small positions, but I start to get kind of like dipping the fingers in or the toes in the pond or something. And so, for me, 19,000, then another little bit at 16, then another 13, another 10, and I'll just keep on doing that all the way down. And I think that for the most part, that protects you. If it starts going up before it gets to my 12 to 13 target, you're involved. If it goes below, I can still accumulate more.
Yeah. So volatility is obviously every trader's friend, right? So how would you say trading in a consolidation market, how would that differ then? Is it harder? Is it easier to maybe like do a quick scalp trade? How is it like trading with a consolidation period?
Yeah, so the consolidation period like that we're seeing right now is, number one, it really takes patience and discipline to not do anything, because you'll see these little ups and downs, and most investors and traders, what you'll find is that they have a hard time sitting on their hands and not doing anything, right? They always want to be involved. It's almost like an addiction where you got to be in the trade, you got to be in bullish or bearish, in or long or short. And so for me, it's using that discipline to just say, hey, listen, wait till the chart tells me, right? So I'm looking for key indicators within that chart. It could be a bottoming tail, it could be a bear flag, it could be a time count. And these are the things that you look for. And then when it breaks one way, you start to say, okay, it just broke. Now it's going to take this leg to this next target, or that could be to the upside as well.
Yeah. Let's talk about gold. What's going on with this?
Gold. So what I love about gold, and everyone hates on gold, but I continue to just absolutely love it, because in this environment, number one, the dollar has rallied like 20% this year.
Yeah.
And gold, I think at the lows was down like 7%. Yeah. And again, it's so important for people to understand that if you're looking at something like gold and the dollar's up 20, you should see gold down 20%. So even though it's down, it doesn't mean it's a bad thing, because it's showing you that there's relative strength. It means that there's accumulation. So when I see gold down 7% on the year, I'm saying, wait a minute, it should be down 20, so why isn't it? And the answer is smart money's accumulating, right? And right away, as soon as I see smart money accumulating, I'm like, all right, now that's where I want to be.
Yeah.
So right away, we just saw a pullback recently in the dollar, and gold ripped to the upside. And so again, that's an indicator that, like, all right, look at the size of that move relative to 1 or 2% pullback in the dollar. Again, it went up like 4% or 3%. And so you see this kind of positive divergence developing, and that just tells me that at some point, gold is going to absolutely take off to the upside, go back to the highs of, I think it was around 2075, and actually break a lot higher. And then here we are. I mean, think about the irony of that. Like, here we are, and the dollar is that's what everyone should have been in, is the U.S. dollar. It's gained the most strength.
Yeah.
So, it's one of those things where I do believe that long-term the dollar is headed down, and there's no doubt that the Fed will eventually be forced to print again.
Yeah.
But we have to all respect the fact that the dollar is still king of the block, right? When you look at the euro and the yen and the pound, it's still looked at as being the strongest one. So you have to respect that in the near term. Doesn't mean the long term it's not going to lose value, but investors and traders are very focused on, they think things are going to happen too quickly.
Yeah.
And it just takes time. I mean, you can't see a reserve currency like in a year go from being the reserve currency of the world to being like zero,
So why do you think the Dixie is so high right now? Why are we seeing such a huge breakout?
Say it again?
Why is the Dixie so high right now?
Oh, so it's high because of a few things. Number one, the Fed is tightening, right? So as the Fed raises interest rates, it sucks liquidity out of the system. So it takes dollars away. So just looking at a standard like supply-demand curve, if you take away some of the supply, demand, the price naturally has to rise. And I think that's what we've seen. And then if you look at it like, well, now we see the Russia invasion of Ukraine causing instability in Europe and potential recessions and all these other things. So you're even seeing like the Bank of England starting to get involved in the pound and get involved with monetary policy. And what that does is it weakens those currencies, which naturally strengthens the dollar, right? So there's a bunch of cross currents that are all lifting the dollar up.
Yeah.
I think eventually it's going to reverse, but there's no doubt that the dollar's been the place to be, right?
Yeah, so it's clear that the States is obviously in some kind of recession. Would you agree with that?
Yeah.
And do you think Europe will be in a recession by the end of this year?
I do. I wouldn't be surprised if they already are. We just don't know it yet.
Yeah.
I think the U.S. by 2023 is in a recession.
Yeah.
And the question, and this is the scary thing for me, right? So the forecast that I'm seeing for the U.S. markets are that right now everyone's waiting on this Fed pivot.
Yeah.
And the Fed pivot, by the way, it's not like they're raising rates and then they're going to start dropping rates. All the market wants to see is that instead of 75 basis point hikes, they go to like 50 and then 25. So it's like going up the mountain, and then we just want to see them come back down.
Yeah.
What we have to recognize is the Fed is not going to start cutting rates for a long time because inflation is too high.
Yeah.
And that's going to be the next cycle down. So you'll get this Fed pivot, and I think we're going to see a monster rally. I mean, you could see 10, 15% rally in the stock market. But then at some point, investors say, wait a minute, we're now in a bad recession. It's getting worse. We're starting to see jobs numbers and unemployment rate go higher. All right, Federal Reserve, come save us, come save the day, Superman, and the Fed's not going to come.
Yeah.
And all of a sudden the market's going to say, holy cow, there's no one here. We've been saved for the last 20 years by the Fed, if not longer, with printing of money. Now what's going to happen? And they're going to freak out. And that's going to be the bigger leg down. That's going to be the equivalent of late 08 into 09, where you had this massive sell-off day after day. And I think again, the equity markets are going to be down over 50% when all is said and done.
What do you think the interest rate will get to? Like, what do you think the highest point will they raise the interest rates to?
I think like 4% or just above. So
Really?
I think there's a little bit more. Personally, I think it's insane. And I know, it's so crazy because originally I was always a big proponent of the Fed cutting back on the amount of printing, right?
Yeah.
Because the writing was on the wall that eventually it was going to trigger inflation. But they kept on doing what they were doing, and now they're trying to undo it too quickly. And you can't go if you look at Volcker back in the 80s, he raised interest rates from 12 to 18%. And essentially what ended up happening was that was about, a 50% hike, right? 12 to 18 is a 50% hike. Well, we just started from 25 base to the 20.25% on the Fed funds rate, and now they're already at 3.25. So percentage-wise, that's hundreds of percentage points. The amount of impact on the global economy and domestic economy could exponentially be greater than what Volcker did.
100%.
And the Fed doesn't seem, I don't know if they don't seem to be recognizing that, or if they just don't care and they're just we have to get inflation down significantly fast. I think it's insane because we could be looking at something close to a major recession or close to a depression, and then you know what they're going to have to do? Print again.
Yeah.
So it's going to get so bad, and this is the problem, is it becomes very political too, right? You see an unemployment rate going to 10%, and now all of a sudden the government and the president's all right, you got to come back and save the day again because people are freaking out, and I'm not going to get reelected and all this stuff. So it's a mess. I pray that they know what they're doing, and maybe I'm wrong, but I haven't been in the past. Remember, they're the ones that said transitory. And listen, number one is it takes patience and discipline and learning periods, right?
Yeah.
So I want to be clear on this, is that anyone who wants to get into swing trading or day trading, you can't just jump in. Everyone thinks, I can make $1 million overnight.
Yeah.
It won't happen. You'll get wiped out.
Yeah.
But if you actually spend the time to learn, think of a brain surgeon and the amount of time that they have, the schooling that they have to go through, and then they make $500,000, $1 million a year. Well, a trader can make that, and you can sit at home and do that, or you can sit on the beach somewhere and do that. It's an awesome career, but it still takes time and effort, right? And so the key is it's learning the charts, learning human psychology. Human psychology is such an underrated part of trading, where you start to recognize when everyone else is bullish. Case in point, Bitcoin last year. That's more of the top when you shouldn't be chasing. I mean, look at Dogecoin, look at SHIB. I mean, some of these things went parabolic. So many people bought at the last little bit, and then they just got clobbered. So you have to start recognizing the signals and going against your own emotional response. And then you start looking at the charts, and the charts actually are I always say the chart is like a foreign book or a language that you don't know how to read. But once you know how to read it, it actually tells you the highest probable outcome of the situation. And so you can start saying, okay, this chart is telling me it's going to rally, or this chart is telling me with an 80% chance that it's going to fall, and then you start betting in that direction. You put money, in that direction.
So you've created courses under Verified Investing Education. We're so happy that we got to partner with you on these. Talk to me about the courses for the people that don't know.
Yeah, so basically the courses that I created were, it's kind of my heart and soul of everything I've learned over the last 20 years. So, and by the way, if I could have had these when I first started, I would be so much wealthier. Like, I mean, the amount of money I lost learning this stuff, and I think that's where my passion lies, is like, if I can help people avoid some of the pitfalls that I fell into, that's game changing. And what's amazing is since we've launched, we've had people come up to me, even here, and they're like, listen, I've taken the Winning Trader series and it's already changed my life. And I mean, number one, that's the coolest thing to hear, right? I mean, it just makes you feel wonderful. It makes all the work and effort that we all put in to make this happen worth it. But the trading series is everything I know from discipline, how to work on that from personal discipline, so you don't do something stupid, which we all tend to do,